Yeah, so we're a TSX main board listed company. I've been in Mongolia for the better part of 20 years, went there in the late 90s and witnessed an opportunity to explore one of the world's great gold belts and decided this was a place to hang my hat. Early 2000s started the company, and fast forward to today, we have 3 deposits we've discovered in a brand new area that's in one of the world's great gold belts. So we've kind of got a 2-pronged approach where we're moving towards production on a simple high-grade open pit deposit at Bayan Hyundai and have a multitude of prospects in the pipeline behind that where we're targeting building up a 2 million ounce resource. So very exciting part of the globe, and one that we're looking to add significant ounces to.
Perfect. Nice introduction, actually. So what's your background? What have you done before? In the context of making shareholders money.
Sure. So I'm a geologist that traveled the globe up until, I arrived in Mongolia in the late 90s. And since that time have run this company as the chief executive, principal chief executive.
Right. Okay. So this is your first and only public company?
As a CEO, that's right.
Got it. Okay, fine. And what? Tell me about the rest of the team then.
So we've starting at the board level. We probably have a board that you couldn't replicate in terms of Mongolia experience. So we have Canada's first ambassador to Mongolia, Anna Bielik. We have Cameron McRae, who built the first phase of Oyu Tolgoi, a $6 billion build. Leighton Croft, who was a senior executive in Mongolia, working with various significant companies, Ivanhoe, Peabody Energy, and there's a number of others on the board. I won't go through them all, but a tremendous depth of experience working in Mongolia.
Right. Okay. And you're circa $100 million company. Why are they excited about working for you?
I think there's 2 parts to that, and obviously each board member has a different view. But most of the board members recognize the opportunity. If they've been around this business as long as I have, it's very rare to see a gold belt like the Central Asian Orogenic Belt with an unexplored portion where you can make discoveries at surface of the grades we've made. I mean, just from a geologic discovery perspective, I don't know that there's another place on the planet that could replicate that. Our company has a DNA that's very much about building stakeholder value. We know we need to make investors money, but there's a real strong interest here in making a difference in Mongolia. And I think that is so important to attracting the right type of people to your board. And so we have that good mix of social consciousness as well as focus on value creation.
Okay. I get the ESG bit. I suspect we'll talk about it a little bit more later on, but just talk to people about Mongolia, because there'll be people that are comfortable with North America, there'll be people that are comfortable with gold, or Africa, whatever they're into. But Mongolia is one of those sort of strange ones. People don't know much about it. So what's the jurisdictional risk, the political scene, who else is there? Who else is,
Sure.
Of size is there?
So I think when you look at the political side, Mongolia came out of the socialist system in the late 1990s and became a market democratic country, market economy democratic country about that time. They effectively are the most democratic nation that's come out of that Soviet sphere of influence. There's been repeated change-ups of the parties in power, and so they have proven themselves to follow that the democratic election process. And in fact, there was an election yesterday. The new president was elected, former Prime Minister Hurlsuk. And I think the key importance there is that when you've seen uncertainty around Mongolia, it's typically related to the election cycles, whether it's parliamentary or presidential. And that's typically because you have the Democrats on one side of that and the MPP party, the ruling party, on the other. As of last night, for the first time in over 5 years, you have the MPP party controlling both the presidency and the parliament. And so I see a period of political stability here as a result of that will go on for several years until you run up to the next election. So I feel quite good about that from a political stability perspective. From a fiscal regime on the gold side, quite stable. We have a 5% NSR and a 25% maximum corporate tax rate that stayed pretty consistent over the last decade. I think when you have a country that has a small population, largely nomadic, you have to be aware of the sensitivities of impacting that when you're building a mine. And That's probably the one thing that you have to be very cognizant of when you're going out there for the first time in Mongolia. We've built a team for over 20 years now that's well situated and well respected in the communities in which we work for the reasons I talked about at the board level. So, that's a quick snapshot of some of the key things on the Mongolia side, but we're very comfortable working in this jurisdiction. In terms of who else is there, obviously Oyu Tolgoi. Everybody sees Oyu Tolgoi as the key story coming out of that country. But there's a multitude of startup gold companies. I think you've had Step Gold on your program before. Step quickly went through an acquisition and moved to production. You have two private companies owned by two of the wealthiest families in the world that have started up gold mines in Mongolia in the last several years, and they're steady state production. And a host of Russian and Chinese companies also active in the country on medium-sized to large-scale zinc, iron ore, coal projects. So there's a whole host of mines that have been built there over the last decade that you don't typically hear about because they're not necessarily associated with Western public companies.
Right. And do you think the market has struggled with the Mongolia bit or just your stage of development? Because I'm looking at your shares, it's been last year and a half, some moving sideways. I think it's probably fair to say. Is that a factor of where you're at on, let's say, the Lassonde curve, or?
Yeah, I don't think there's any question that there's a Mongolian discount. I think every time the news highlights the discussions between Oyu Tolgoi and the government, that has an impact and a resultant discount on those companies working in Mongolia. I do think, though, as you just said, on the Lassonde curve side, we are in that period of the trough where people want to see, is that financing coming together? Are permits in place? Is the construction launched? So we're right there. And, we're able to sweeten that somewhat with the exceptional exploration upside we have. But there's no question that both of those things, Mongolia and place in the curve, have some impact on valuation.
Cool. That's my next three questions then. How are the licenses, permits, and financing coming along?
Yeah, well, let me speak to that. So on the permitting side, COVID has had an impact, largely on the inability to hold public meetings. Our detailed environmental impact assessment is the next major gateway to move to construction, and that requires local gatherings. Not only have we had the inability to get our people out into the field to meet with people in the local community, you've had a restriction on the number of people that can get together. So you can't have that public gathering. I see that as breaking. I feel pretty comfortable, but by the end of this month, early July, those gatherings will be allowed to take place. And once we pass through that, over the summer, we would be submitting and receiving approval for our DEIA that would allow us to move into that construction period later this summer. The construction permitting work is immense, but that's all been going on behind the scenes for the last 8 months, expertising it with the local regulatory offices. So all of that's ready to go, and I'm feeling very confident about where we are with that process coming to conclusion over the next few months. Immediately upon us having those permits in hand, we would move into early works. And those early works initially are permanent camp, some of the infrastructure on site we need to do a full construction period, some of the civils, road works. If things get pushed too far into winter, as you can appreciate, Mongolia has a minus 20 to minus 40 temperature from December till March. So there is some potential delay if we push concrete and steel into that period. But I'd say from our most recent projections of late 2022, we're probably flirting with early 2023 into second quarter 2023 for first gold.
Right.
That's
so
Corona's
had some impact up until now. You think that is fading, but you've got processes in place to mitigate any effect going forward.
That's right. Yeah.
Okay.
I think the key point for investors, stakeholders to look towards is that sort of midsummer passing through local meetings and state level DEIA approval.
Right.
That's the real key.
Okay. So
and then I can go on the financing side.
Yeah, if you don't mind, that's where I wanted to go.
So skipping back about a year and a half ago, we had the European Bank of Reconstruction and Development become a investor in the project, initially on a convertible, and they did convert. So they're now owning 11% of the equity. EBRD, you'd be familiar with their mandate isn't just commercial, it's to move former socialist countries into a market economy. And so they're much more incentivized just to see projects do well, to get them up and running. So they're a great stakeholder supporter to have. They have indicated continued support to be there for the project finance package. But perhaps most importantly is last October, we signed a mandate letter with Export Development Canada. And Export Development Canada has indicated an interest in putting in up to $55 million US of the debt required to build this facility. The capex is $59 million straight up, and so that's the major component we're looking for. With both of these development banks, the due diligence periods are lengthy. You know, this is you probably heard in talking to others that have dealt with development banks. It's a very onerous process. We got through EBRDs, and we're now just getting through the due diligence with EDC. I expect that to be wrapped up in the next month or so, and then we start to get amber and green lights for the full debt facility that will be tied up as we move towards the latter part of this year. It's only after I have permits and EDC comfort that I'd be looking to fill any void between our cash position today and the EDC debt. And at this point, you know, perhaps it's $10 million, let's say, US, that we're looking to fill in that void. There's a host of opportunities for us, whether it's sub-debt, whether it's royalty stream, whether it's straight up equity or convertible or gold loan. All of those things are on the table, and we're in discussions with multiple parties. But the closer I can get to passing those milestones I just mentioned, as well as having exploration results along the way, puts me in a better negotiating position for whatever I do in the middle. So that sort of comes together later in the summer as well. Today, we're sitting on $8 million in cash, and we have about $3 million of in-the-money warrants and options. So we're not in any stressful situation for cash. I feel like there's a great appetite out there to fill whatever void we need. It's just us putting management, making sure we do the best job possible to avoid dilution
Yeah, for sure. And the low capex really does help. Just on EDC and the EDRB, I've dealt with EDRB. Usually there are terms conditional, right? Yes, and you need to meet certain terms. They are quite light-handed, which is great. Mm-hmm. But what are those things which may affect your choices with regards to the other type of money that you have to bring in?
Mm-hmm. Well, you're right. I think there's more onerous conditions precedent than you see perhaps with commercial banks. But I would say the most critical area is in the environmental and social arena. And I would suggest that we've done an exceptional job in that area. We've been punching above our weight for many years in that front. We have already filed an ESIA with the bank, the EBRD last year, and that needs to get posted on their websites, and they take submissions from stakeholders for which there weren't any significant or any complaints or concerns. We have to go through the same system with EDC, but as I said at the outset, we're in a very good position in terms of our ESIA and environmental and social support. I don't think, there's nothing else really in those conditions precedent that's out of the norm in terms of commercial banks. I'd say ESG is the key.
You're right. Yeah, that's I think part of the course with them. With regards to, obviously you're at that point with coming up for a DFS, right? Are you going to be, and you got $8 million cash?
Yeah.
And I get the warrants. They're in the money at the moment, so you're kind of good. But are you going to be applying that to any kind of additional exploration work in the meantime, updating the resource, or any of that kind of good stuff, just to kind of keep the news flow going whilst you're waiting to make an investment?
Absolutely.
Right.
Yeah. So as you may realize, we made a significant discovery earlier this year we call Dark Horse. We're just really starting to get our teeth into that, and we will mount a phase 2 program this weekend, drilling at Dark Horse. In addition to that, there's a license we acquired 100% interest in late last year called the Ulan license. It's almost directly adjacent to the deposit at Bayan Hyundai. We weren't in a position to drill that previously, at least the gold targets along the western boundary of our deposit, because we didn't hold 100% interest. And so we wanted to get that put to bed. Through the earlier part of this year, we put in place the permits necessary to move to drilling. So my expectation is that immediately on the heels of starting that first drill at Dark Horse, we'll be moving to a second rig at Ulan as early as mid next week. That Ulan target is, for me, tremendously exciting because all of our exploration right up to the boundary there suggests that there's continuity of that deposit towards the Ulan southeast corner. So very exciting maiden drilling in that area to begin next week.
Okay. So, I mean, so questions sent in here, people trying to understand. One, well, two questions. One, are the assays up to date? Have you seen all of them come back in?
There were 27 holes pending from the northern part of Dark Horse, and due to the shutdown in Mongolia and then a delay on lab chemicals, that's been stretched a little bit, but I expect within the next week we'll have those all on the market.
Okay, and then I guess the big question, which I had to send in by a few people, which is about the do you think any of these assets will actually join up and become one?
Right. So, this is a really interesting district in that there's no previous information. You tell people you're in an area that has been drilled, but there's just no exploration that's taken place here before. So we're putting together the structural architecture for a new district. And the simple answer is yes. We do believe that the structural corridors between the Bayan-Hundy and Dark Horse deposits and prospects are connected with an interwoven sort of network along the northeast, all of which have mineralization, but as you'd expect in a district that big, they're not all one big deposit. You have fluids traveling along those conduits, and you have to find the unique structural intersection or zone of dilation to find something of significance. But yes, the simple answer is they are connected.
Right. So you just got to work out the economics. Right. So with regards to, you talked about end of 2022, maybe 2023, getting into production, right? It's quite aggressive, quite nice. So, and the CapEx is low, but you're going to build your own infrastructure. Can you talk to us about what's the scale of that? What's the size? What's the output you think from that?
Sure. Yeah. So we delivered the feasibility late last year. So we've been going through construction readiness for the better part of the last 6 or 8 months. That effectively gets handed over to us by our consulting companies this month. So I feel we're shovel ready. We've already ordered our comminution circuit, the ball mill and sag mill. We're preparing for other orders. We have a permanent camp ready to be built as soon as we get that permit in place. So a lot of the engineering design work and just preparatory work is in place. You talked about the team earlier. We have a number of people on our team that have built and operated mines in Mongolia previously, expats in Mongolia. And so I feel very well prepared to kick this off. The build is quite simple because of the high grade. This is a 3.7 gram per ton head grade, producing 60,000 ounces a year, 65,000 ounces a year. So it's a relatively small footprint, 1,800 ton per day plant, which is going to cost us $60 million. The parts and equipment are effectively all coming across the border from China. It's off the shelf, more or less. I think the only exception to that is the elution circuit and gold room that comes through South Africa and Australia, but everything else comes out of mostly CITIC in China. We'll move about 600,000 tons of dirt a year to get that 65,000 ounces a year. So again, it's a relatively compact operation. We will have a hybrid solar diesel plant on site to generate power. We have our water reserves already established about 2 kilometers from site. There's not a need for a lot of external infrastructure, if you will, but we are now only 200 kilometers away from a major coal mining center right at the Chinese border, where you have rail and blacktop highways coming into the country. You think back 10 years ago, we were 1,000 kilometers from nowhere standing at Bayan-Hundy. And now with that encroachment of infrastructure coming in from China's thirst for natural resources, Mongolia is really becoming less infrastructure poor, if you will, and it really changes the game out there.
And just do me a favor, for people who haven't yet read the economics around this, do you want to kind of run through some of the numbers?
Certainly, yeah. We're looking at an OPEX of 733, all in sustaining costs. The CapEx is 59 million. We're going to generate about $50 million in net free cash flow after tax at $1,800 gold.
Right. For how long?
NPV at that level is about 215, and IRR is 77%.
Right. So what's the life of mine at the moment?
Life of mine is six years, so it's about 8 years all in, start to finish, but 6 years of production.
Right. You would look to, like, do you think, again, is that a factor? Because people use it, it needs to be 10 years minimum.
I think it's a factor for those that look in isolation at the feasibility study, but when you take into account that 6 years is based on the $1,450 gold price used in our feasibility, or $1,400, there's another 200,000 ounces of gold at about 2 grams plus sitting in the perimeter of that economic pit. There's 200,000 ounces of gold sitting at Altenar, our other deposit to the north that's amenable to the CIP plant. There's actually 500,000 there, but there's 200,000 we could put into the CIP plant. And as we speak, as I just mentioned, we're drilling Dark Horse New Lawn. And just to paint the picture at Dark Horse, it's early days, but we have 2 holes 100 meters apart. And 10 meters from surface, we have 30 to 40 grams of 3 to 5 gram material that's oxide. It's just stellar opportunity for finding near surface resources that can immediately be dropped into that plant. And it's on mining license ground that's already under mining license.
So how much money are you, or how many meters are you going to, have you given guidance for this year, for next year? Because obviously exploration is going to be a big part of whether people believe you can scale this quickly. Yeah,
there's about 6,000 to 7,000 meters that will be drilled here between start next week and mid-July. There's another 4,000 meters in the budget, but the results of these programs will dictate what I go to the board with to look at further meterage. If Ulaan or Dark Horse deliver what I think they can deliver, then those programs get expanded significantly. You do have to look at other sources of cash at that point, but obviously exploration success drives share price, and that dilution issue becomes less as you move in that direction. I think for those, going back to that initial question, there's sitting already in front of us close to 500,000 ounces of readily available ore we could bring into the back end of that plant. So without stretching my arms at all, we could look at a 10-year operation. It's just not in the feasibility yet.
Right. Okay. And what is it per meter? What's the drilling cost?
This is a very inexpensive place to explore. We're straight up, I think, $87 a meter. I kind of use a rule of thumb of 200 Canadian for all-in assays, camp costs, the whole shoot and match.
Right. Okay. So you got 7,000 plus maybe 4,000. It's just not in the studies at the moment, but you are looking to just continually, create more data to allow you to potentially maybe go and raise some additional capital in the market. Okay.
There's about $2 million in the current budget for exploration, but as I say, success will drive the scale of that program, and I'm highly optimistic about what we're seeing in all 3 of the other project areas: Ulaan, Dark Horse, and the Altenar prospect to the north, which I didn't speak to much other than mentioning the resource. It's a 5-kilometer long system where we've only defined a few pits at surface, which have 500,000 ounces of gold and another 3 million ounces of silver and 200 million pounds of lead and zinc. So that's a bit of a different animal, but there's just so much fertility and prospectivity in this area. I don't have any hesitation to say this is only going to grow and have an extended mine life, even without further discoveries at this point.
So at the moment there is a kind of Mongolia discount pre-production. And we haven't done any analysis on the producing companies because there aren't that many for a start. Mm-hmm. But do you expect things to change once you're actually in production? Because you are throwing off, $50 million cash per year.
I think.
But then what do you do with it? What do you do to kind of sustain that kind of new growth profile? Because pre-production, it's tricky.
Mm-hmm. So. There's a few questions in there, but going back to how the market reacts, I thought they reacted quite well to a re-rating. From a discount, you'd expect pre-production to post-production with step. They went through a 2 to 3 times increase in share value pretty much through that process. I don't think there's a shortage of investors. Well, the number of institutions that will support you once you're in production obviously increases dramatically. So I see that as an opportunity for a re-rate for us in that 2 to 3 times. I think what sets us apart is that exploration upside and making sure that pipeline continues to produce the opportunities that investors on the retail side are attracted to. And that's what we're doing. I see the entire construction period and post-construction as really building a foundation for growth. I'm focused on this area because of the opportunity to build a multi-million ounce resource and a much larger producer. And so that's always going to be the theme behind this, is we're growing ounces. The 60,000 ounces is a base, a foundation to provide us with leverage to continue to unlock that value.
Right. Okay. I think it was, again, someone's asking here, what about a merger with STEP? I guess you want to be in control of your own destiny, do you?
Well, you know what? I mean, we would be remiss if we didn't always look at opportunities that are accretive to shareholders. And, STEP is an opportunity for a merger in country that gives you economies of scale. What I'm biased by is I've worked for 30 years as a geologist, and I've never seen the upside that I see in this district. And so how do you part with that at a discount at current valuations? We're building value based on future discovery, and I think we have an exceptional opportunity to do that. So it's hard to give up that unless that there's equal opportunity on the other side. And I've worked hard to find this. I've worked in South America, throughout Asia and the Americas, and I haven't seen as prospective an area for near surface high grade gold and copper deposits as I have in this district.
How's the G&A? Because you've got a really big team, certainly a really big board, management team, etc. So how are you managing to keep that
Pretty
down?
good. We're probably running around $160,000 a month in all-in G&A costs. Most of the board take their compensation in deferred share units. As we build this team from what was an explorer to a developer producer, there's different pay scales that you have to be cognizant of. We haven't quite tipped into that yet, but you will see a increase in that G&A that'll probably become quite significant or material as we move into the latter part of this year and early next. We're not quite there yet, but at this point, quite manageable.
Okay. So it's always difficult when you kind of move through the phases to kind of keep that down.
Yeah.
Especially when a lot more cash flows in. Okay, let's look at coverage, actually, because the markets is the side of this. Again, coming back to that Mongolia thing, because not a lot of the analysts want to look over in the east when there's a lot going on back home. So how are you managing that? Because obviously you're up in Nova Scotia, the guys that you want to be talking to, Vancouver and Dan in Toronto. Are you going to get much more coverage?
I'd have to say it is a bit of a challenge given where we're located. We have Don McLean at Paradigm, has been a long-time analyst covering the story and perhaps one of the most respected analysts on the street in Toronto. We have been on a watch list of Laurentian, and I keep a number of analysts briefed. So I expect as we get closer to passing through this milestone and be looking at production, we'll see some other analyst coverage come out. But yeah, to be blunt, it's a challenge to get additional coverage.
Yeah, you're not quite of the size yet, and the liquidity is not quite there either. So it makes it difficult for them.
Yeah, there's no shortage of interest, particularly I'd say on the exploration side. It's hard to get retail investors or analysts excited about building a 60,000 ounce mine. I think they're excited by the cash flow opportunity here, but it really is the exploration upside that is what investors are looking for. And we deliver that. I think people will be interested when we start to come up with the Ulan results. And obviously Dark Horse is a very sizable prospect that we'll be exploring for years. But yeah, there's some good news to come on that front in the very near future.
Good. Okay, well, Peter, nice first introduction and overview of the story. Do come back on, and maybe we'll get stuck into one of the projects, the assets, and sort of see how you're actually approaching it on the ground too. So, thanks very much, and you have to get your jab soon, aren't you?
Yeah, it's going to be happening in a couple of weeks, and I can get back on a plane and actually get back here without quarantine. So
there you go.
It's all.
There you go. Fantastic. You can tell us all about it. Okay, appreciate your time. We'll speak soon.
Thanks, Matt.